Hello, this is Linda Keith, and I am following up on a webinar, 60-minute webinar on global cash flow of tax returns when you have multiple pass-through entities in the mix. If someone's not the guarantor, would you need the K1? So the example in our scenario was that Jan was a guarantor for B&J Floors, but her husband had the donut shop and had the winery, and I was suggesting that you might want to get those K1s as well. And some of you said, no, 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 no. Dan's not going to guarantee. We can't make Dan guarantee, so we can't make him give us anything. All right. So, number one, there's what can you make people do? And you need to know what that is, and you need to know if you're violating regs, guidelines, or those sorts of things. If you're not violating something, then I would suggest to you that Jan's guarantee on B&J Floors depends on Jan's overall family situation, not just Jan personally. And certainly if you're in a community property state, maybe it does. You do have to combine them. But let's just say that my husband and I are doing pretty well, and then his business starts tanking. Tanking. Don't you think that affects the family income? Don't you think that affects our ability to come to the table if my company needs help? So my suggestion is simply this. If you really want to know what situation Jan is in, you probably need to know the family situation. But you have to apply your guidelines. You have to apply your judgment. If you wanted to know, you really would need it all. But I understand that in some cases, you can't do it because they're not obligated on the loan, and you can't require that they provide that information. So if nothing else was in the way, I'd want to see the K1s from the spouse's activities to be sure that there's not a drain on the family resources. I mean, the whole point of getting Jan a guarantee is because you want a backup, right? No backup available if all of her personal cash flow is being sucked into the black hole of the winery and the donut shop. Just saying. Somebody asks, by requiring Dan's income, he was the spouse, isn't this a violation of a reg? I don't know the answer to that, and I'd love to hear back from you. But I think the word requiring is the issue. If you are asking for it just to see what that impact is on the family, maybe that's not the same as requiring it. So I can't answer that question, and it's a great question. Is requiring the spouse's income or tax information somewhat dependent upon community property rules where the lender is located? I would think so, although I do a lot of training in California. California is a community property state, and my clients regularly do just use one person's income. So obviously that's possible there.